three types of budgets that we've looked at so far, which are more useful, which you will see them in level 2, level 3 and level 4, are operating budgets, both fixed and flexed, together with the actual results compared to, and you will also see cash budget mainly on level 4 AAT and capital budgets in level 4 AAT as well. Hi, welcome to 365 AAT Education channel. This is your tutor. My name is Alan, and today what I would like to discuss or run through is budget or budgeting. Now, in terms of management accounting, this is one of the intermediate to advanced level topic. It is part of the AAT level 2, part of the AAT level 4, and part of AAT level 3 as well. So just a quick understanding of what is budgeting. So in a management accountancy, budgeting is a plan, nonetheless than a plan, and this is the really starting point. After going through or cracking down all the early chapters on how to get to the understanding the cost and the other costing techniques, now you're coming down to planning. Remember earlier I've mentioned that management accounting is there to help managers make decisions, so meeting their objectives, which includes planning, controlling and decision making. And one of the products that the management accountants produce is preparing budgeting reports. Now, in terms of budgeting, there are two types of budgets really. One is, you might refer to it as a budgeting or standard costing. Now, the difference between this is budgeting is you're looking at the cost in a broader sense, in a production, like total cost, while standard costing you're looking at the unit cost. You're zooming in as per unit. Now, we'll look into standard costing later, but focusing on budgeting, we have two types of budgets. Now, type number one is what we call fixed costs, a fixed budget, a fixed budget and a flexed budget. Now, before you start the production level, we have a fixed budget. Now, a fixed budget is exactly states the production level that you aim to achieve in this period and the costs, laying down the costs that will have to be incurred. Now, part of this is understanding that some costs will be variable, some costs will be fixed, some costs will be semi-variable, and some costs will be stepped costs. So by applying this, we are able to extrapolate this into the production level that we want. Now, once we have our fixed cost, our fixed budgets, then we can use that to run our production. Now, assume that at month 0, which is today, we have set our plan, and our plan is a fixed. And on month 0, on month 12, at the end of the period, we will produce our actual results. So these actual results will then have to be compared with our plan, initial plan. Now, initial plan being referred to as fixed budget, and the outcome being referred to as actual result. Now, one problem here is, we must first make sure before we start comparing that we are comparing like for like, and that will give us a more meaningful interpretation. So for an example, if you've planned to produce 100,000 units, but then for some reason you've produced 80,000, or you've produced 120,000, then therefore the fixed budget cannot be compared with the actual results because it's different activity levels. initial plan was 100,000, but the actual result was 80,000 or 120. So we have to find a way into bringing the initial plan or the fixed budget in line with the actual activity level, and we will have to produce what we call a flexed budget. Now, a flexed budget is basically an adjusted fixed budget to match the actual activity, and from that point is where we can compare with the actual results. So it's actually flexed budget that we use to compare it with the actual result. Now, with budgets we have operating budget. Now, operating budget is based on the profits, so the income and the expenses for the particular period. Now, this could be on a monthly basis, it could be on a quarterly basis, it could be every 6 months, or it could be up to a year. So that is called operating budget. So you're looking at income and expenses for a particular period, so you can work out the operating profits or operating loss for a particular period, planning side of things. And also you can also prepare what we call a cash budget. Now, a cash budget is different from an operating budget because it focuses on the cash movement. Now, there's a difference between profit and cash. So in a cash budget, you are looking at the incoming cash and outgoing cash. So the cash receipts and the cash payments. And this could be different from business to business depending on their level of credit trading or credit transactions. For an example, a company that or business that receives cash, does a lot of cash sales, then their cash budget is more likely to be aligned with their operating budget. However, if you're offering credit on your customers, then your income, where it's realized early, but your cash is delayed based on that credit. So when you're preparing a cash budget, you need to take into account that the lag, the time lag of the cash delivery, as well as when you're looking at the expenses. There are those expenses which have to be paid immediately, and there are those expenses which are paid ahead of time. For an example, insurance is paid ahead of time, rent is paid ahead of time, and there are those expenses which are paid in arrears. So payments in advance, payments in arrears, and payments as they are used. Now, usually questions within the budgets will be very specific as to the timeline of the payment, whether it's income payments, cash receipts payments, or cash payments. So it's good to look at this question very carefully to ensure that you keep up with this. The other type of budget that we have is capital budget. So we already discussed the operating budget, which deals with profit or loss for a particular period. We've also looked at cash budget, which is cash movements. And the benefit of doing a cash budget is to see the shortfall in certain periods. So sometimes you might have surplus. Surplus will include the cash more than you need in a particular period, and you can decide what you want to do with that. You can either reinvest it in your business, or you can either give it out to the shareholders or business, or pay off some of the loans that the business have, or you can actually keep it or retain it for another period. Or sometimes you might have a shortfall of cash or cash deficit, and therefore it's good to see this ahead of time so that you can plan whether you want to raise more shares and get more money into the company, or you want to get a loan to cover, or set up arrange a bank overdraft to cover for that period. So short-term loans or bank overdraft or a long-term loan, that could be an option as well. So capital budgeting is different type of budgeting, but this is more for non-current assets. So businesses now and again, they need to review their capacity. Now, their capacity is based on their non-current assets. This includes their land and building, their motor vehicle, their office and computer equipment, fixtures and fittings, plant and machineries. So some of these assets will be through wear and tear. There will not be any more useful or efficient or productive. New technology will be out there, so businesses are looking to getting rid of the old machineries, old non-current assets, and replace them with the new ones. So capital budgeting is much more in depth of how do you maintain, expand the capacity of the business, but how do you acquire and replace, and at what particular point are you going to do that? And if you're looking to do it, and how much cash do you have, and how do you pay, and how do you acquire these assets, and how do you dispose them, so that you don't choose to buy an asset at the time where you don't have cash. You want to buy an asset when you have surplus cash and when the old asset is ready to be taken out from the business. So 3 types of budgets that we've looked at so far, which are more useful, which you will see them in level 2, level 3, and level 4, are operating budgets, both fixed and flexed, together with the actual results compared to. And you will also see cash budget mainly on level 4 AAT, and capital budgets in level 4 AAT as well. And there are other forms of budgets, such as you have a budget called incremental budgeting. Now, incremental budgeting would mean that it's a type of budget where from the actual results. Now, practically speaking, when you're looking to set a budget, the starting point is your previous financial reports. So you would look at your previous financial reports, and you look at your next accounting period, or the period that you want to budget, and then what you want is to slightly adjust it for any foreseeable plans for this period. Generally speaking, things tends to stay the same, but if there are any knowledge that there are going to be some changes, then you're going to add it. So this is called incremental budgeting. It's an increment, so it's just an adjustment from the last performance. Now, you also have a rolling budget. A rolling budget will be a budget which just continues. Nothing changes. Just you finish one period and the same budget becomes the budget of the next period. You also have top-down budgets. Now, top-down budgets, and there's a one called bottom-up budget. Top-down budgets are budgets which are set by managers or senior members in the company organization, and this budget or the activities are passed down to lower hierarchy workers within the organization. And also you have a bottom-up budget, where a budget is actually proposed by in the lower end workers, and is pushed up the hierarchy within the organization. And we also have contingency budget, and this budget is mainly for an foreseeable issue that happens, so you can put an extra funds or resources in to meet those unexpected events. And the last one, we have zero-based budgeting. Basically what it means is you don't have a budget, but you're going in and spend whatever it takes, and at the end of the period, whatever you've achieved, that is your budget. So zero budget means you start with no plan and spend it as much as you can, and at the end of the period, whatever you've spent, that is your budget. So these are other types of budget, but mainly budget planning, and you will come to see them mainly in level 4 in applied management accounting. So I hope you've enjoyed it, and please don't forget to like this this video and subscribe if you haven't for any future videos. Thank you.